Let me now welcome on board Arun Maheshwari, the Joint MD and CEO at JSW Infra, to talk about how their quarterly performance was. Arun, hi, morning. Your strong numbers this quarter, as per what the analyst was estimating. What reasons you think drove this strong volume reported by you?
No, it's a natural, the capacity utilization which we have created. The capexes were already done in the past. And the utilization was started happening now because these are new terminals, especially the strong growth came in from our Paradip iron ore and coal terminals, which are relatively new. One is 3-year-old, one is 2 years old. So the utilization of the assets are started happening now. So that has led to this kind of growth.
Margins have also crossed 50% mark on a consolidated basis on cost reduction initiatives. What will be the long-term sustainable margin outlook for next 2 to 3 years?
So in a port company, typically the margins are a factor of utilization of the assets as well as the how the volumes are driving it. In our case, the volume growth has been decent enough, and that's where the percentage of EBITDA growth you can see over here. We don't see any drop in the volume in near future because the locations are such that the utilization will continue to remain very robust and going upward from here on. So the margin projections are likely to remain robust.
And can you share with us the integrations and status progress for the recent acquisitions undertaken, especially at the Mangalore port?
So there are two acquisitions which we have done in the last quarter. One is the oil tankage terminal in Middle East, Fujairah, which was the first such acquisition because we were never big into liquids. So this was one of the acquisitions which, because we have a lot of presence in that part of the world. And it is a comfort zone wherein we could put the hands-on experience on the largest oil port of the world. And we are having a very good experience. It's only a month now, but then we are really enjoying that part of it. The second acquisition which we have done is a PNP in Maharashtra, which is in Raigad district. It's a riverine port, which is a 5 million ton capacity with a 19 million ton of kind of environment clearance already available over there. We see a synergy impact over there because that port is, though small in size, but it has a railway connectivity. It has, of course, a shore side and as well as the land available over there for future expansions. We see a very good synergy impact with Jaigarh port, which is in Ratnagiri district, about 120 nautical miles south of it. Jaigarh port doesn't have a railway connectivity as of now. With this kind of port acquisition, we see a lot of synergy happening, especially when the government is coming with the RSR kind of project, Rail Sea Rail, what they call as. The movement, coastal movement is being encouraged quite a lot. We have a coal terminal in Paradip. So a lot of cargo generation from Paradip is likely to come to PNP port. Part of will come via Jaigarh with the hub and spoke model, which has been our flair for the last couple of years. So this will have an overall synergy impact. The coal is moving from east coast of India to west coast. A large port is Jaigarh, wherein it get transshipped, come to the PNP port, and thereafter it can take a rail route to deliver into central land or hinterland of Nasik, Manmad, Bhusawal, Belgaum, all these places.
Right. Your recent announcements in the interim budget on port connectivity, even for Middle Eastern Economic Corridor, has also come through. What kind of growth are you looking at for the port industry, and by what rate can the industry then grow?
See, the government has been very clear for the last 4 or 5 budget, if I have to analyze very clearly. They have been very, very focused on reducing the logistics cost for the country, because this is the cost which is going down the drain because of inefficiencies. So a lot of spend has been happening on the infrastructure side. This is the first time wherein we could see a signal wherein the government has done good enough and they are looking forward towards the private sector to invest more and more into this sector. And the companies like us, which are very solid balance sheet, we would like to encash upon this opportunity. Having said that, we also look at the kind of thrust is given to the coastal movement by the government. The port-led connectivity projects are the top of the deck for them. They really want the country to come up with the investments in the projects which are going to create a complete massive infrastructure for movement of cargo east, west, north, south, everywhere, whether it's by rail or by sea or by pipelines, or by road. So I think overall this industry is looking very, very robust. if a country has to go from 5 or 7 trillion economy to 10 trillion economy, it cannot happen without touching the shores. It has to shake the shores. And India has a large coastline, good opportunity, a play for everyone else to get into it. So we see this is a very, very good opportunity for the port sector. The growth has been 3 to 4% over the last 10, 15 years of CAGR, if I have to look at it. But private player growth has been much faster than government because government has 12 major ports. They remain there. Of course, the capacity increase is happening on those ports because of mechanization and modernization. But the private players are really coming up very, very big on this sector.
In the Red Sea have disrupted trade globally. Any kind of impact that has been felt by the company? Has the backlog cargo started piling up for the third-party customers?
No, if I have to look at the port sector per se in which we are operating as of today, because our port sector is in our entire portfolio, oil and containers are not as prominent today as what in general where the disruptions are happening. Ours is a largely industrial-based kind of handling. These are bulk process-driven industries, be it steel, be it power, be it mines. So we don't see those disruptions impacting us, be it a Red Sea conflict or be it conflict in the Ukraine area. It has really not impacted us anywhere, any which ways, because most of our cargoes are coming from Australia, Canada. If it is coming from US or so it takes the South Africa route and bypassing the Red Sea channel. So we don't see that kind of any kind of disruption in our business.
Appreciate your time. Thank you so much for joining in on ET Now.